A single asset fund in a commercial property context is an arrangement whereby a group of like-minded individuals collectively pool their resources in order to acquire a single commercial property. This property is one which they would typically be unable to afford on their own. Single asset funds are designed to give the closest alternative to direct commercial property ownership. So the experience should really be the same as if you owned the property directly yourself. There are no complicated dividend policies, and importantly, there's no corporate actions within the fund. The fund acquires the property, it then pays the net rent out proportionally to each of the individual investors in the fund. After a period of time, say 8 to 10 years, the property is prepared for sale, and then once sold, the single asset fund itself is wound up with all the proceeds paid back to the investors. So it really is the closest alternative to direct commercial property ownership. The Financial Conduct Authority defines a single asset fund as an alternative investment fund. Alternative investment funds are really meant for what the FCA calls professional investors. This typically means that you are a high net worth individual, or that you've been involved in some sort of sophisticated business role. Maybe you ran a company or you were the director of a company. You have to comply with one of those two criteria in order to be eligible to invest in one of these single asset funds. So they're really designed for people who have invested in things before and who have experience in running or managing companies. The risks of a single asset fund are really the same as the risks in investing directly in commercial property. And you can break those down into three broad categories. The first is the tenant. You want to know that the tenant is good at what they do, that they're a good operator, they're good at operating and running their business. They're good at running their business, they're going to be profitable, and they're going to be able to keep paying the rent to stay in your property. The next is the location. Is the location critical to the business that your tenant is running? You really want to be in a mission critical location, be a critical part of that tenant's business. And the final is the property. Has the property been designed well from an environmental perspective? Is it fit for purpose? And is it going to continue to be fit for purpose into the future? The key benefit of investing in a single asset fund is that it gives individual investors the ability to get exposure to institutional quality assets. Institutional quality assets tend to be larger, they tend to have better tenants, and they're often in better locations. Another key benefit is that a single asset fund will only ever acquire one asset, like the name implies. During the life of the fund, there won't be any additional acquisitions which aren't always accretive to your total return. So you know what you're buying into from the outset, and you know there won't be any future acquisitions that you are unaware of during the life of that fund. So it really is the closest alternative to direct commercial property ownership.